Alright, how's it going, everybody? This is Tim with King's Options, and we are taking a look yet again at the week. A little bit at the week that was, a little bit of the week that is coming up in front of us. First thing on the board, and I'm leaving it here for a little bit so you can see, is the earnings reports that still will be coming out. A couple names on there that, Neo's on Zscaler, Salesforce. Duluth Trading, I hear they make good pants. I didn't even know GitLab was a publicly traded company. That's crazy. DocuSign. So, there's a couple names on there that you may be interested in. I don't know. But, what's that? Lulu? Is Lululemon on there? Lululemon. Yeah, Lululemon is on. I can't pronounce it. Lululemon is on there. So, there's one for you. But, anyways, let's go take a look at the sector report. See how we held up over the past 5 days. And yes, I still have a little bit of a lingering cough, so that's no fun. Okay, over the past 5 days, over the course of the week, does not look pretty. And a lot of that is the way it ended, not the way that it was kind of fighting for the bulk of the week. But this last end of the week did not go so well. So staples down, discretionary down, utilities down, industrials and healthcare, energy's up, financials are up. I saw a headline at some point saying that the price of oil was dropping to somewhere around $50 a barrel. So on the commodities section, you could see some people trying to jump in on that. But at the same time, as far as energy goes, and companies related to that should end up reducing their bottom line, thereby increasing their profit margins. So it's going to look good with the price of oil going down, at least from a company perspective. Financials, no idea what's going on there, but they were up almost 1%, and then everything else, just doesn't look so good. S&P as a whole went down 0.1%, so basically even. See what one day looks like again. Bleh. One day. It's got some significant downsides in some of these, technology being a big one. NVIDIA was interesting, right? For those of you that watched that, watched NVIDIA earnings release. Good news, good news, good news. Not a great reaction, so something's broken. Don't know what. I don't dig too deeply into those things, but is what it is. Let's go take a look over here at the upcoming economic events. Looks like Tuesday. Manufacturing index. Again, these are the major market movers. There are other things that could be happening, like Monday. Okay, well, let's take that out. And so here's a lot more events, right? Still, nope. Okay, no, should still be just U.S., and it is. So there's a lot more going on, and at different times of the day, but we are really just worried about the market movers. So that's what we want to be watching for. That's the time we want to be watching for. That's 10 o'clock Eastern Time, 1000, 001000. What are we looking at? 10 o'clock in the morning. Okay, nothing there. Thursday, international trade goods, job reports, and EIA petroleum status. Really mostly worried about these. I'm not even trading by 11 o'clock Central Time, so not a big thing for me, and I don't really do that. But it's the petroleum status report, so again, energy is a thing, and see what's happening there. Friday, we have the employment situation. Okay, so I say employment for jobless claims. That's really about the unemployment more than the employment. And then Friday, we have an actual employment report. So try not to get those mixed up. I know what they are in my head, and I'm using terms loosely. I should be more strict about that when talking to you guys. Keeping in mind also that this is none of this is financial advice. I can neither offer that, nor would I consider myself qualified, worthy of being able to do so. I trade. I manage my own investment portfolio, and I do just fine for myself. But I would not recommend anything for anybody as far as how to handle their money. No, that's your business. This is just information. Take it for what it is. Here we are with the RTY. We're going to go to the charts. So we can see RTY actually had a pretty decent week, except for the last day, but we still ended up being up overall. Not at the all-time high, 24.77.1, but pushing that direction. The only real problem I see moving forward is that now we've created this large fair value gap, right, on this bump up Monday, Tuesday, Wednesday, Thursday, Friday. Sorry, Monday, Tuesday, Wednesday, Thursday, Friday. So that was Friday, and then that was the week. Now the good news is that it held this particular line. I'm going to go ahead and call it this line. So these buyers from here came in, and it didn't even allow it back to this tabletop-ish level. So I'm going to go ahead and move that kind of up to the top of that top of this fair value gap. But we still have this large fair value gap. I think if we do fall down into that, we could see a lot of play in here. But so far, everything is looking fairly bullish. Even the pullback on Friday stopped at the top of this large candle from the prior Friday. It dipped down below, but then came back up and stopped there. So we do have some confidence in this price area above this 23.44 level. Something to keep in mind moving forward. Let's go check out YM. Okay, YM because M. That's YM. What do we got here? Above the 21, everything's looking good there. So here's the level that we had marked at the beginning of the week. Sure enough, it pulled back down to it, and it was based off these topping candles. Pulled right back to it, on the dot, and then jumped up above, right? So we set this level last week. This is the first I'm looking at it, same as you guys, since we set that level. We've got a new all-time high at this 45.841, so that's fun. It should struggle there a little bit, especially considering we are probably about halfway. We're about 1.5 on the ATR. So we could see it move sideways a little bit, get down closer to 1 on the ATR, maybe closer to the 21 moving average, or get the 21 moving average closer to the price action, and then scoop up. That could happen. Or we can just see it shoot up. Who knows? But this market being what it is, generally speaking, it's going to rotate with tech. So if tech continues to go down, we could see this continue to benefit. Other than that, I have no real levels. The same levels apply. Moving to the downside, we've got to break this and close candles below. And then below that, of course, we have this right here. You get a large fair value gap at this point, which this creates. That level is kind of the top of. We already got it, right? So, okay, I messed that up, but... So we'll go bring that here. Hey, what are you doing? Okay, so apparently I can't grab that. We're gonna try it again. It's probably because, let's do that. Silly wabbit. There. Now you want to play nice. Okay, we're gonna go all the way down to the candle body. Because there's a gap right here, we're going all the way down to the candle body. So this is part of the inconsistency. Or inefficiency, not inconsistency, inefficiency. Rather large inefficiency. We dipped and touched into it, but this level held that we already talked about. So that's where we're sitting. And again, if we drop down into that area, I can see price oscillating around in here quite a bit, very easily. The averages are in there. Moving forward, they're only going to rise. And it's a big enough area that it could be a lot of indecision. So, all right, let's see what else we got. That's the YM. Let's move to the ES, and we've got a new all-time high in the ES. Okay, we're up above. Blah, 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 blah. There's the week. So what happened? What happened? Well, we set this level based off here. And sure enough, we broke it, set new all-time high. That was Thursday, and then Friday pulled back, but we didn't even make the average. So while this did look like a pretty strong pullback, and it's still definitely a bearish candle, you did see we started to hit the bottom of this weekly structure, which would be down here with these two, started to hit the bottom of that, and the buyers came and defended. So we still look like we're in a pretty good position to continue upwards. But as usual, every time you hit all-time highs, you're going to be fighting with that a little bit, and You never know exactly where. You can run Fibonacci's, and that can give you some extensions and some good ideas, especially if you run clusters. But either way, it's going to fight. It's going to fight. To the downside, we're kind of looking at the same picture with one exception that I will add in here, and that is moving and putting a line on the bottom. And I'm going to put on this candle bottom, because we've got this wick and this wick. So kind of taking a more common number, giving some of those credit, and rather than put it right at the bottom, I'm going to put it here, because I think that anywhere in this area you're going to see buyers step back in to defend if they're going to defend. Otherwise, it's going to break below. Liquidity, again, just like the other ones, right? Monday ended up creating a fair value gap. It is a good size fair value gap that we could drop down into very easily, oscillate around in, and not even lose this 63.70 level. So pretty easily. The only thing that would look overly negative is if we started closing below there with the way that this average is going. That means we would probably start closing candles, or at least wicking below significantly that 21 moving average. See if it rolls over, see if it finds its feet, carries on, who knows. It's moving down the ways a little bit. Oh, and that reminds me, next week is a short week, except for futures, which are still open on Labor Day. But the regular markets will be closed on Labor Day, so you will not get to play on Monday unless you play futures. And I don't know about you, but when the rest of the market's open, I do not trust the futures market. So no, I'm not playing it. All right, moving on from there, my favorite. So numbers pretty look the same here. Let's go to NQ, my good buddy, my buddy and me. All right. What happened? What happened? What happened? Make this bigger. So we had this fair value gap that Friday broke into, right? And we ended up in the middle of it. We wanted to see what happened. Well, we oscillated around in the middle of it, and now it's no longer a fair value gap. This is gone. For the NQ, that's useless, because all of this we've traded in and prices are looking good. It's the inefficiency is now efficient. Now the curious side of this is that we have not broken this low level. So we created a structure for the week, and while we did wick below it, and we're going to create, let's take that. While we did wick below it, we still held that structure. Now the downside is that we closed below the 21, we closed on a very negative candle, and it's much more bearish than the rest of the ones we've seen. So now we're talking about rotation, right? So you saw the YM, which often rotates or also opposite of the NQ. They operate in divergence from each other. So as this goes down, if it continues to go down, you may see YM continue to go up. It's possible. If it's a general market sell-off, you'll see all the markets sell off. But we seem to be struggling a little bit in the tech sector as a whole. And this is possible indication that that is to continue if we start going down. If we do, obviously we need to close the candle below this level, and when we close candles below this level, here's where we're headed. It's 23,114, that's where we're headed. Again, taking the difference between this low and this higher wick, going with this middle one, but really anywhere in this area, you've got to see buyers decide to step in somewhere in here if they're going to defend it. If it drops below 23,114, then the next area of liquidity, or it's all liquidity, possible stops down to 22,770, and then we are wide open for quite a ways to the downside, right? Maybe we could say, okay, there's something here, but really, it's just below here. It's all this, and we don't run into structure again until the top of this level, 22,168, which is another 600 points down. So we can definitely see that. ATR being 300 points or so right now on the NQ. Take 3 days worth of work, right? Very, very easily we can see something like that. So it's a question of, does it defend this area? We start losing this area, yeah, it's gonna go. So just something to keep an eye out for, something to watch, and we'll see what happens. I would like to see this area defended personally. I'd like to see it go back up and start hitting all-time highs again. Who wouldn't? I think everybody wants to see that. We've got a lot of uncertainty right now when it comes to trade deals that are still up in the air, when it comes to tariff enactments, as well as delays that are still up in the air. There's a lot of things going on a political spectrum that they don't affect the market. So they affect the market directly, but they don't affect the market directly. They don't affect the market directly in that people aren't necessarily going in saying, I'm betting this is going to make the market go down. I'm betting this is going to make the market go up. That's not what they're doing. What they're doing is saying, I don't know, with all this stuff happening, I don't know what's going to happen with the markets. I don't know if the companies I'm invested in are going to be able to make use of this or not. If XYZ happens, then I can make a move. And while you've got people that are unsure of those decisions, right, that doubt that's placed in the market, that's what causes volatility. And volatility, generally speaking, volatility is just, higher fluctuations in the market than average. But generally speaking, higher volatility is also related to fear. So the higher the volatility, the higher the fear. And that's when people do start to panic a little bit. And it's not over anything particularly going wrong, but markets are emotion. So when panic hits, you get it. It's like stampeding buffalo until they're done running it out. It doesn't matter why they're running. That could have stopped. Whatever they were running from could have stopped chasing a long time ago. Until they get tired, they ain't gonna stop running. It's the same kind of thing. Until people who are panicking get tired, they're not gonna stop selling. So that's why we see this kind of these bigger moves going on in the market, is this volatility, is this uncertainty in what is happening across the world right now. When we get some certainty put in place, every time we do, things look better. You've also got a lot of economies that are really beginning to struggle because, I'm sorry, let's face it, you can't borrow your way out of debt. That's the dumbest concept that governments have been able to sell people ever. I just don't get it. Germany's falling apart, France is falling apart, Japan's falling apart, economically speaking, and it's ridiculous, and we're not far behind. And that is neither in defense of nor in opposition to anything that our current administration is going. That's your own opinion, and whether you think it works, I have my own opinions. But the point is that until there's some certainty, opinions are pretty much all you've got, and that's what you got to deal with. So. Anyways, I hope you find this useful. Take a look at the markets. I encourage you, please, to open up your charts, look at things, and see with your own eyes in the way that you run your systems. Look at a bigger picture. Look at a 10,000 foot view. Look at a 30,000 foot view. Look at look at whatever you need to do. Zoom out a little bit on these weekends and get a feel for where things might be going in a larger picture, so you know that if some of this is just noise, or some of this. And I'm gonna give you an example. I'm not going to do this with any of the others. We're just going to do it here because we're on NQ and because I like it. So this is a daily chart. Let's move out to a weekly chart, right? Still got the same lines. On a weekly chart, you look at this and say, okay, well, we could actually pull back quite a ways and still be above the average, still be in an uptrend on the weekly. We could pull back from where we are. What was the close on this? Close on this is 23,465. The average is 22,343. So it's basically 1,000 points lower, and all it was a reversion to the mean, right? So that's what I'm saying. Zoom out, take a look, see how bad things are. When we were down here and we crossed over the average, okay, this looked ugly, folks. That's what it looked like. And yeah, beginning of the year, it got ugly, and it pulled way back. Ended up being a great buying opportunity, and here we are running up. Yay, that looks good. But maybe we struggle again, and maybe we pull back even more significantly. I don't know, but the point is, overall structure is still showing an uptrend. The only part that I don't like, as I'm looking at it right now, is I don't know what's going on here. This is the counter channel. No, there's none of this I don't like. Even the moving averages, right? So you got, here's the 21, here's the 50, 50, 100, and 200. Almost confuse these two. And here's the 200 down here. So everything's looking good. It's all an upward slope. Haven't come back to a full reversion to the mean in quite some time, since May was the last time we even saw it, and it was to break through. So we could pull back as a reversion to the mean, and the market's not crashing. It's not crashing. And these are the kind of things that they give you perspective when you start taking a look at them from this viewpoint, right? Depending on how you trade, what time time frames you trade in, this may or may not help you. Looking at a weekly doesn't really help me. I trade on a 1 minute chart. Quite frankly, looking at a daily doesn't help me, other than to say, okay, as a whole, I can see where we might see a bit of a turn. In which case, maybe this following week I want to focus on more bearish trades, right? At the same time, we're basically just at the bottom of this level. We held that level. We could rise back above the 21. We could just move sideways from here. The average is moving sideways. We're still, generally speaking, showing that way. And we just had the 100 pass back up over the 20 or the 200 at the beginning of the month. So maybe this is actually a good thing, and this is just a pullback reversion of the mean that's going to pop up. So I don't know what I want to do. And actually, that sounds more like it. Indecision. Maybe we see some sideways trades if nothing causes the market to spike in either direction. We just see a lot of chop, you know. And it's just an overall, I don't even want to call it a bias. It gives me kind of a feel for what we may be looking at moving forward. But either way, you got to trade the markets you get on a daily basis. And when I'm looking at these charts, when I trade, here's what they look like. I don't do overnight sessions. This is what I've got, and I am trading between, where are we at here? None of this. Yeah, I'm trading over here, okay? I caught this move down. That's what I caught, and I caught a huge chunk of that move down. It was a good day. But the point is, this is what I'm trading, and the way I traded it was, okay, started open, couldn't break above, traded down. Here's some structure I'm looking for. Structure to the downside, ended up holding, took some more. Okay, we hesitated in here. Here's some structure. Looked like maybe hit fair value gap, drop down, close the candle. Hey, that's structure to the downside. Good play. Same thing. We showed here the highs didn't break through this prior consolidation area. Hey, that's good structure. Follow it down. Those are the kinds of things when I say I'm looking for structure on the daily, this is the kind of stuff I'm looking for. When it got down here and we started poking back up, well, in all fairness, I had collected enough points, I was like, I ain't giving any of that back. I stopped trading right in this area-ish level. But the point is, we came down, we had a level on the board, we hit it, I was looking for it, that was fine, sold into that strength, didn't quite make that level itself. But you can see as we came back up, it could have looked a lot like this, except we'd consolidated for a lot longer, so it's like, okay, maybe not. In shorter term pictures, we had set lows, came back up, set a higher low, came back up, set a higher low. What was going to happen? Okay, we faltered a little bit, but we didn't break down. And then we ended up setting a higher high. Not a pretty one, but it was there, right back to the fair value gap, right? Higher low, higher high. Oh my. But we still not closing the fair value gap before we turned down again. And that ended up being lower. So this is, all these pieces are little bits of structure that you can look at and make decisions on. I'm not going to tell you which way, and it's easy to look at this moving backwards and say, oh, here's what you should have done. I'm not going to tell you that either. What I'm showing you is the structure itself. Basically, look for price to cluster, and then what's it doing? What's it doing in relation to what it did at the last time it clustered, right? What's a higher probability? If it's doing this down here, clustering, and it can't overcome this cluster, what's the greater possibility? That it's going to shoot up to the sky, or that it's going to fall further into the dirt? What's the bigger possibility? Now we know, right? But probability speaking, that's the question you're asking yourself when you're putting a trade on. What's the greater probability? And then you determine what your risk is, set your trade, make your entry, and go. And it either works as you thought it might, or it doesn't. That's it. Do it again. Wash, rinse, repeat. So, all right, I'll get out of your ear. I'm just rambling at this point. But thanks for listening. I hope you get some value out of it, and we will talk to you soon. All right, bye.